Hello, chart watchers and Decision Point faithful. Welcome to this Thursday morning, May 21st Decision Point show. We are recording it on Wednesday evening, so we will be looking at what's been happening to the market as of trading close on Wednesday. Welcome, and if you've never been here before, we especially welcome you. And let's go ahead and get started. First of all, welcome my father, Carl Swenlin. How are you doing today, Dad?
Very good.
Excellent. Ready for a good show, I'm sure.
Yep.
All right. Speaking of a good show, what are we going to talk about? Well, first of all, of course, is what is up with the market. It is up. It is up. The market continues to move up, and we have our thoughts on that. We'll talk about that. Carl will be looking at his earnings update chart so we can see where we currently stand. We'll be covering some of the more interesting decision point indicators, some that we don't necessarily look at in the decision point alert. So we thought we would point out Carl has some interesting information on those. We'll be looking at Berkshire-Hathaway. That was one that Carl picked out to talk about today. And I will be looking at a Decision Point Diamond of the Week. I'm going to start this for our Decision Point show. I run my scan, and as of this afternoon, when I ran the scan, this was the stock that caught my eye. So I'll talk to you about why, and you'll get a sample of pretty much what I do in my diamond reports by going through that. So let's go ahead and we'll get started. Oh, and if we have time, we will go through some of the sectors, but this is a lot to talk about. So we'll see if we get there or not. All right, decision point scoreboards. These are updated as of today. And as you can see, the NASDAQ certainly is the better performer right now. These signals tell you really what the configuration is of the EMAs. So a short-term buy signal means that 5-day EMA is above the 20. The midterm trend model means the 20 is above the 50-day EMA. That gives you that buy signal. And then the long-term trend model, we look for the 50 above the 200. And so you'll find that right there. Right now you can see NASDAQ 100 certainly is doing much better than the others. The Dow honestly is the big laggard here with not having nearly the same amount of buy signals. We're looking at that midterm 20-50-day EMA crossover, though, probably happening soon if the market continues to at least stay above those EMAs on the chart. Decision point sector scoreboard. Currently, we are seeing a few green buy signals that have been appearing over the past couple weeks. Com Services is on an intermediate term trend model buy. Remember, that means the 20-day EMA is above the 50-day EMA. Discretionary is on a buy. Healthcare, of course, has been one of the bright spots. And technology is on a buy, including a long-term trend model buy signal along with healthcare. And to me, this tells you these are the areas that the coronavirus has not hit quite as hard. In fact, I think that and technology is becoming kind of the new defensive sector, if you will, in this coronavirus environment. Because a lot of those names, the big names, software is doing really well. And again, these are those pockets of strength that we are seeing out there, and technology and healthcare certainly are at the top of that list. Before I move on, I do want to let everybody know if you are a Decision Point bundle subscriber, that means you get both the DPA and the DP Diamonds. That costs $50. And as a benefit, you basically get our $49 trading room added for free. So for $1, you can have not only the trading room, but both of the DP Alert and the DP Diamonds. I think it's a great time for you to try it out. And then you can join Mary Ellen and I in our live trading room Tuesday and Thursday at 11 a.m. to 12:15 p.m. Eastern Time. All right, well, let's go ahead and get into some charts. I'm going to pass it to you, Dad. Actually, I'm going to look at the market chart. We'll talk about the markets first, if that suits you.
Yes, it does.
All righty, so let's go ahead. I'm going to pull up my 5-month candlestick chart that we do cover pretty much every day in that Decision Point Alert, and kind of look at what's been going on as far as market action. And I have to say, after we got that pullback yesterday, I did not expect to see a breakout from this trading range. I don't know about you, but The indicators, I mean, they were kind of mixed, but seeing the market continue to fly with a 1 and almost 3/4% gain today. You know, the PMO had turned down for the first time when we went into that decline. And now we got a bottom above the signal line, which is usually considered especially bullish, and it's continuing to rise. What's going on?
Yeah, we still have the bear market volatility, but there's a bullish cast to it all because, you get a couple of down days like last week, and then it gives up the ghost. The bears just can't take hold of it.
No.
So, yeah.
It does seem strange, and you know, one of the things we do is, of course, we're looking at we play devil's advocate a lot of the times, which is why I think people thought we were perma bears, because well, the market just kept going up, and our job is to play devil's advocate, if you will, and say, hey, this is a problem. There's weakness here, and now it's kind of switched over a little bit, because I know as we've been you know, we went into that bear mode here, you know, we hit that bear market low, and now we've been, you know, you try and find the reasons why the market might be rising rather than falling. But of course, now we're sitting in this very interesting period of time in this consolidation zone for all this time. And now we've actually popped out above that, which is looking interesting. And honestly, if you look at on that 1 year daily.
The one year daily, that's the one. It's right up at the top of that zone of resistance.
Yep. This is going to be a moment of truth.
Right.
We will have to see. Well, what are some of the indicators you're looking at?
Okay, I'll take this screen here. Okay, I was looking at the first of all, the earnings. Let's go to that first.
Yes.
I've just for anyone that's new watching this is what we call the value range. This is PE of 20 on the red line, PE of 15, fair value, and then the green line is undervalue. And that's where the market would be if it were any of those PEs. Right now, it's going to be a PE of over 21. Not too bad. Notice back at the bottom of the 2009, we had a PE of 89. Post 9/11, a PE of 47, and PE of 33 at the .com bubble. We're way up there, but not too bad at this point.
We still have quite a few to report still too. That second quarter is just, that's what I keep waiting on, is reality to set in when the interview coming in.
Right. Well, of course, we're working on first quarter earnings coming in, of course, where we get projections for Q4 of 2020. Mm-hmm. And that's where the problem is that these are where the lines are projected to be at the end of the year. So we'll see. Mm-hmm. Go back to, okay, this is one that stocks above, this is for the S&P 500, stocks above their 20, 50, and 200 EMA. And I try to track them against cardinal tops and bottoms. Notice we had the last top was here, and now the current top is higher. But notice we've got divergences on all three of these, and that's the kind of thing we had here, mm-hmm. and here. We didn't get it in the beginning of 2018 because we had a parabolic advance. It was just going way too fast and too far, and it just didn't have a chance to do any deteriorating.
Yeah, but now you can see that it is there. Those
Right.
declining tops before those cardinal highs do seem to be, they do foreshadow.
Right. It's just not a good situation. Okay. Here's this uh, chart I've been featuring more often, but we're showing how you get these fast uh, up moves on the indicator. This is PMO crossover buy signal. That's when the PMO of the stock crosses up through the signal line, which is the 10 EMA of the PMO. And when you get this kind of thing, it's generally a sign of uh, a very bullish move in progress. Again, we have one here, and we're still watching the aftermath, and it's been moving higher. I wanted to show as a just a way to estimate uh, this move from that point to here is a 12% move. If we go from right where that topped out to for 12%, we still don't make it to the all-time high. Not even close. It's going to take from here. So we're still have a ways to go.
Yes.
Don't need that one. I was noodling around the other day, and I came across this stock, and what caught my eye was the parabolic again. But what we have here is with parabolics, one of the outcomes is it totally crashes, it goes back to the baseline. And the second one, I learned this from Kennedy Gamish a long time ago, you get a high level consolidation. I bring this up just because I don't hear people talking about it very much. This was about a 50% decline, but it's still well above the baseline. And so this could go on for years. It could break out. But this is a good sign when you see this consolidation after this crash from the parabolic. This is the stock that caused the Vance, supposedly, the company, Moderna. On Monday, before the open, they had announced that they had a vaccine in testing and could be out by the end of the year. So that's, we saw it went up a big time along with the market. But you see, we have a parabolic here, and it is breaking down enough to fill the gap. I'm not going to say it's a total parabolic break, but it's like, be careful.
Yeah.
But I'm assuming that this is going to be absorbed. I don't see it, again, I'm not seeing this going back down to the baseline. This is not some fly-by-night stock or some stock that's just horribly weak to begin with, that got blown out of, that had a big blow-off move. I don't think that's the case here.
No. Just one thing to keep in mind for those of you are lucky enough to hold and get involved in a parabolic on the way up. What I highly recommend as a trader is to set a trailing stop, because even if it's a wide one, because it will protect you to some degree if you do get that parabolic breakdown, because those can happen in a day or two and you lose 25-30% in like 2 days. So a 10% trailing stop isn't a bad idea if you've been on this parabolic and are looking at huge gains right now, but you don't want to give up any if it's going to continue.
Correct.
Yeah, it saved my bacon a few times. Let's put it that way.
We had the Berkshire-Hathaway on the agenda there, and I got finally took a deep look at this stock. It's Warren Buffett's company, and
Yeah, that's the monthly chart.
it's got a great reputation over the years. But I was kind of curious. It doesn't pay a dividend, which to me is a drawback on a stock that's solid investment material. But uh, comparing it with the SPY, it's pretty interesting to see from this baseline here on both of the SPY and Berkshire Hathaway. SPY was up 273%. In the same period, Berkshire Hathaway was up 702%. And now you know why everybody loves it. But it's interesting, again, Berkshire Hathaway was up. Yeah, okay. And from the entire period shown here, it made a high. It was up 1,606% versus 932% on the SPY. But most of this gain was back in this end of the chart. If you go from this bottom here, Berkshire Hathaway was up 407%, whereas SPY was up 518%. And this is, the SPY has dividends reinvested, so they're absolutely the same kind of setup here. It's not like a market index in that regard. And of course, all of Berkshire Hathaway's earnings go back into the company. So, right. So Berkshire Hathaway, and you hear him complaining on a regular basis, there's not a lot out there he wants to buy because so much it's overvalued. And you can see here's the relative strength, and it gets just Berkshire Hathaway gets weaker and weaker as opposed to the compared to the SPY. Now, wasn't that interesting?
Absolutely. It's I still wonder who can afford one of those shares. It is pretty crazy.
I didn't notice it, but yeah.
$24,000 or something a share. It's
well, the B shares of Berkshire, BRKB, that's about 10%. I'm really not speaking from, but it's a lot. It's about 10% of the A shares. So that the smaller investor could get in.
I see.
Not a recommendation. It's just an observation. Another one that caught my eye was Virgin Galactic. They're the space version of Virgin Air, and I went ahead and took a look at that, and we've got a nice parabolic and then a crash. Amazing.
Right down to the baseline there.
Right.
It's holding on. It was holding above that 200-day EMA, but look at it now. It closed below it even. That's not a good sign.
No, of course, this was just at about the time COVID-19 came into the picture. So I'm not sure what the connection is, but there you go. Somebody had asked us to cover junk. Maybe I did last time, but I was looking at the chart and I noticed, here's SPY and here's the junk bond ETF. They look very similar. Just an oddity. And yeah, the correlation, look, it's almost completely one-to-one correlation. So that's my grab bag for the day.
That's your grab bag for the day. All right. I'm going to share the screen. I want to talk about I'm going to talk about gold actually, because we didn't touch on gold, and I should have put that in our agenda.
Yeah, yeah.
I think that's a good one to look at right now. And, you know, they're still running the commercials everywhere. Now's the time to get into gold. It will be doubling. Those are the commercials, not anything I just said, not what I'm saying, but it's definitely an interesting chart. You know, we got the breakout. Certainly it's pulled back. One of the things I have to say that it isn't doing much right now. I mean, it's not great, but it's still holding that breakout, and really important, I think, is that 20-day EMA. It's still holding that, and the PMO is suggesting that we will see higher prices, and I don't see any reason why we couldn't test the high we had back here in April. I
Right.
mean, the chart looks pretty good.
It's a pennant there, and it broke out of the pennant. And gold has been really hard to follow. I mean, it rarely takes off.
Yeah.
So we've got this breakout, but it's probably going to chug higher, just like it's done. It's up 50% from the bear market low. So.
Yeah, I'm liking it. And you know, really hand in hand would be the gold miners, which I've been watching pretty closely because, you know, we got that breakout and then we got the pullback. And that was when I was interested and I was going to start getting in, but I wasn't liking the charts quite enough. And now I'm really regretting it because I still think that gold miners have higher to go. And you know, they are, a lot of people say, well, why don't they go travel exactly like gold? And, you know, you can give me your answer, but, you know, what I think about is the fact that you've got, they're a company. They're not just a miner. So that's what you're going to see a lot of times. Is it's really they're kind of subject to the winds, if you will, of what's going on in the market. And of course, they're a company, so they have to report and all of that. So they're not going to always go with gold.
Right.
Yeah. So okay, we
You
agree,
know,
right?
we I don't know if you can get to them easily, but we have a silver cross and a golden cross.
I absolutely can get to that. That's what this was. So I'll
So I
just
think
flip
it's
it
right
back.
up. And
There we go.
okay.
And
Wow.
yeah, and it's still looking good. I mean, you've got 80% of the gold miners right now with a 50-day EMA above the 200-day EMA. That would be a golden cross. So we have 80% of the gold miners right now on that golden cross. And of course, silver cross, that, I don't know, that's a little on the overbought side, I have to say, with 96% with their 20 above their 50. But look at GDX. I mean, it makes sense that I would hope at least 90% would be following along with this ETF.
Right. And it's but you notice how the move from the March low on the gold silver cross, you know, all the way up to the right is a very quick move, and similar to the move back in last June to July.
All right. I apologize for a little bit of barking here in the background, working from home, and little
This is
dog isn't happy about the gardeners being here. So
sheltering at home. This is one of the advantages.
this is one of the things that happens. Yes, especially when my daughter's not around to calm him down when the gardeners are here. But yeah, I think GDX still looks really good, and
So
I'm liking it.
I was saying that notice the move on the silver cross on from last June went up from zero, well, close to zero, all the way up to 100%. So,
Right.
and then it held there in that general area for
Absolutely did.
about 3 months. So even though it's getting in the overbought range, you can stay there.
Yep. Especially, yeah, really, the PMO is the same way. A lot of times they'll stretch out, and RSI, you'll see the same thing, where it'll stay up in that overbought territory. I mean, if it's a strong stock or a strong ETF, you're going to see that. All right, my diamond of the week. So I just did my scan before the program and looked at some of the stocks that were out there. And this was one I thought looked really interesting. It is a software stock, and software has been a pretty good performer. And this one came up on the radar because the PMO is turning up right now, and the RSI is above 50. And it's also got a very strong StockCharts technical rank. It's above 75. And I like to see stocks with internal and relative strength, and that's what that StockCharts technical rank will tell you. So it gives it a score based on intermediate, long-term, and some short-term information, price action, etc. And then it takes that value and compares it to all, in this case, small cap stocks. That's the universe. And it tells you what percentage it is between 0 and 100 amongst its peers. So you get that internal strength, but then you also can see the relative strength on a StockCharts technical rank. So I do like to look at that as well. The PMO gives me my momentum, and the RSI tells me how overbought or oversold the price is in relation to its range. So over the last 14 days. So I think that this one looks pretty good. We did just get a breakout. I would say it's a double bottom, but the textbooks tell you that those are reversal patterns. So, you know, it's not really a true double bottom, but honestly, I've seen double bottoms come in as continuation patterns as well.
That's close enough. Yeah, that's
yeah,
yeah,
absolutely. So we do have this double bottom kind of configuration here. We're getting the breakout above that confirmation line. You can see that price is not overbought. That PMO is turning up. And, you know, the OBV, the volume is coming in on this breakout. And that's what we want to see, is an OBV that would be higher than these previous tops. So you want the OBV to break out at the same time as price is breaking out. So all of those are there. And of course you have those EMAs configured in a very nice way. So this would be a diamond. I don't write on Wednesdays for the diamonds, but since you are here watching the show, you get a preview diamond, and that is with Qualsys. So I look at all kinds of stocks based on my scans, and this one came up on my scan. I thought that was especially interesting. So I think we have a little time that we can look at these sectors. So I'm going to bring up the sector summary, and I like to look at it in Candle Glance. And this basically is a DecisionPoint styled chart. So you have the 20, 50, and 200-day EMAs on here. And then we also have the PMO. And this is a 6-month chart, just so I can get as much information without it getting too scrunched up, if you will. Technical term there, scrunched up. Okay, so looking at these, I mean, obviously the PMOs have been doing fairly well, but we do have some where we're looking at PMOs that are below the zero line. And it's not surprising to see a couple of these, like financials, which have continued to be hurting. Real estate is interesting. You know, we had a pop off of that bear market low, but it has just been trending down ever since. And I know you and I follow the real estate market fairly closely around here in California. And I have to say that that's one of the areas that I've kind of avoided with my diamonds, just because we do have the problem of, I don't know, 1/3 of people out of work and no one paying rents, and then consequently not paying mortgages and.
right.
So it's not looking too good. All right, well, that's,
yeah.
Yep, that's about all the time we have right now, and glad you joined us today, and hope that you have a good weekend, and we will finish off with happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.